Now, in this video, I'm going to be teaching you how you can analyze the market from the starting point down to your entry point. Now, before I start anything, what I observe that a lot of beginners make is that they don't even know the right time frame to start their analysis from. Now, your entry time frame should be 2 time frame away from your analysis time frame, which means if you start analyzing the market from the 15 minutes or let me say 30 minutes time frame, your entry time frame should be in the 15 minutes time frame. But this does not mean that you cannot analyze the market in the 15 minutes time frame and still take your entry in the 15 minutes time frame. Okay, but this is just some way that it can actually help you to figure out your entry or your analysis time frame. So starting from the 4-hour time frame, since I'm a day trader, on the 4-hour time frame, what you are basically looking out for is your support, your key levels like your support and resistance. That's what you are looking for in the 4-hour time frame. Now, your support and resistance, this is how you are going to identify them and label them correctly. Anything above the current price should be your resistance level, while anything below the current price should be your support level. Okay, you are not going to write support or resistance or support and resistance. No, anything above the market price, because here's the market price. Okay, you can see the countdown. Here's the market price. So anything above it should be your resistance, while anything below it should be your support. Now, after looking for your support and resistance, what you should find next is where the market is coming from and where the market is more likely to move to next. Now, if you observe this chart, the market came down from this 4-hour support. It moved up. After tapping into this 4-hour resistance, the market came down to mitigate this 4-hour order block. Okay, we have an order block here. This 4-hour order block. Now, after market mitigated this 4-hour order block, the higher place, which means the place that have a higher probability for the market to move to, is actually this high, which means this high here. More likely the market have a more chance of moving to this high. Now, after knowing where the market has gotten to and where the market is more likely to move to next, what you will look out for is that you go down to the 15 minutes time frame or whichever time frame you choose to take your entry from. But just know that the bigger the time frame, the more neat and accurate your trades is going to be. But before I go down to the lower time frame, let me just give you guys a very quick tip for you to actually know if the market is going to come down to your level or if it's going to go up to your particular level, which means if you are looking for a sell. Now, each time the market creates a wick candle like this, okay, each time the market creates a long wick candle like this. Now, this is in any time frame at all, okay. The market has a higher chance of coming back to fill this wick, at least either fill it to the half, like 50% of it before reversing, or completely fill it before reversing to the upside. Okay, I've tested this and I've seen it a lot of the time. Now, the reason why that has a higher chance of happening is because if this particular week did not take out any liquidity in the market, which means this week did not tap into any fair value gap or order block or just any liquidity level at all. If you observe this particular week, if you observe this long week actually took out this order block here. Okay, this long week actually took out this order block here. So that week is protected, but this first one here is not protected. So the market have a higher chance of coming down. Now after that, after giving that tip, what you go down to next is the 15 minutes time frame. Now the same analysis goes for any instrument at all. It goes for forex, it goes for gold, index, any trading instrument at all. Okay, you just need to backtest it and see how well it works with your pair. Now, all you need to start analyzing is the market structure, which means a change of character, a break of structure, this and that. Now, if you observe, after market mitigated this order block, this was the first area market actually changed character, or the first area that gave us the change of character. Now, after the change of character, market broke structure to the upside. Okay. Now, after the break of structure or before the break of structure, we are supposed to see something like this, and the market moving up to the upside. But the market did not give us that liquidity able, at least in this particular time frame. Okay, but no issue at all. We have our first break of structure. Okay, it is break of structure. Then the market moves up to actually come and mitigate this particular order block here, right? Now, if you observe closely, after market mitigated that order block, the market was coming down to this level, but then the market got here and moved straight back up. Now, for a lot of traders, they may think that, oh, maybe they have missed this entry, they have analyzed it the wrong way. The honest truth is they have not actually analyzed it the wrong way. The thing is, the market will respect every single zone before it will get to that particular zone. If you observe, the market respected this liquidity, which is this order block. The market respected, which one again? Market respected this week here. So the market is going to respect every single week before it will come to your point of interest. Now, if you observe, after market even make this push up, the market finds it difficult to actually create another break of structure to the upside. Okay, the market is still consolidating around this level. The reason it's consolidating around that level is because the market has not actually swept liquidity. Market has not swept liquidity, because if you observe closely, this is the only area that the market has not mitigated, which means after this change of character, because there's an available order block there, after the change of character, supposed to see something like this. Market give us break of structure. Okay, break of structure, the market come back to mitigate this before actually having that momentum to move to the upside massively. Now, the liquidity to this level now, the market has created the liquidity to that available order block here. This is now a liquidity to that available order block, because there are going to be a lot of buy limits order at that particular point. Okay, there are going to be a lot of buy limit order at that particular point. So that is it. The market is going to mitigate every single break of structure or order block or week before it actually gets to your point of interest, which means to the first point, which means to the first point the market actually broke structure. This is the same strategy that I've used to take all this trade, and this particular trade, I took this trade live. This was a live trade. Yes, I traded this. I took this one live. It's either this one or this one, but one of these 5 trades that went in my favor, I took one of them live, just like the way I was analyzing, just like the way I'm analyzing this market. I was analyzing on that particular video while taking that trade. Okay, so my analysis for this is just how you analyze the market. Okay, you just need to, you have your available order block, market break structure, but This particular one, the market did not give us this liquidity. But if you go down to the 5 minutes time frame, if you go down to the 5 minutes time frame, you will actually observe that everything you are seeing here, which means everything in this is a trend line liquidity. Everything you're seeing here is a trend line liquidity that the market need to clear off. That is the reason why you are seeing that the market, even after this bullish momentum, the market has refused to actually give us another break of structure. The reason is because it has not cleared liquidity yet. Okay, the market still need to come down properly. Like the market is unpredictable, right? But like just because of your experience and because of the way market actually move, is because of that you have your knowledge of analysis and how you can actually predict what is more likely to happen next. Okay, and this particular level, which is this level here, is an order block in the 4 hour time frame. You see, this level is an order block in the 4 hour time frame. The market have a high chance of coming to that particular level. So that is how you analyze your charts. You start from the 4 hour time frame, you look for your support and resistance, then you go down to the 15 or 30 minutes time frame. You actually analyze the market, you have your break of structure, the market pullback, which means the structure you are looking at for is like this, coming back, breaking structure, coming back, and then going to the upside. Okay. In my first video, I did not really analyze it for you guys. I just broke it down, which means I've already taken a trade, so I just recap it for you. But in this video, I actually tried my best to tell you where you should start your analysis from, especially as a day trader. So see you guys on my next video.